Market Prospects, delivering timely information and education to prairie farmers for 30 years. Market Prospects is brought to you by the University of Saskatchewan's Department of Bioresource Policy, Business and Economics, and these sponsors. Log on to marketprospects.usask.ca to view past programs and for information on upcoming programs.
This week we start a new series of Market Prospects interviews. Our topic this week is producer marketing plans. Joining us from Regina is Dr. J.P. Gervais, Chief Agricultural Economist with Farm Credit Canada. Dr. Gervais, welcome to Farmgate.
Welcome. Thank you so much. Good to be here.
What major components should Canadian prairie grain farmers include when developing marketing plans?
Well, you have to have a plan, but not any plan. That plan must match your objectives for your business. Where do you want to take your business over the next 2-3 years? Now, are you in a succession mode? Are you in an expansion phase? Whatever the objectives are, that marketing plan needs to match your objectives. Now, it can be something simple as, for example, contracting 25% of your expected production by St. Patrick's Day, another 25% by Labor Day, another 25% by New Year's Day, and let everything else float. The bottom line is you have to have that plan. Managing risk is not about projecting where prices will be. Managing risk is establishing a plan that will allow you to go through a number of different scenarios. And so you should really sit down and take the time to actually draft what that marketing plan is going to look like for your operation.
Well, seeding is almost completed on the Canadian prairies, so where should prairie farmers be in terms of developing and executing their marketing plans for the 2015-2016 crop year?
Well, if you look at on-farm stocks, we're just a little bit below the historical average when it comes to stock on the farm. So I don't really think that what you have in the bins right now does matter much. Hopefully what you have in the bins right now is the result of your marketing plan for last year. Now, when it comes to this year, I think one of the key things is you have to have an idea of your cost of production. Too many times, we know we have a ballpark estimate of where our cost of production is for the different crops we're growing, but we don't really have an idea of what is the exact break-even price for the crops you're growing. So get an idea of your cost of production, make sure that you pencil that down, and then that will allow you to set the objectives up and make sure to make the right decision as you move forward into the next marketing year.
So what should prairie farmers consider when looking at contracting production prior to harvest?
Well, of course, if you contract prior to harvest, you're exposing yourself to the risk of failure-made deliveries or coming up short from expected production just because of hail or because of other weather issues. There are ways to actually eliminate or get rid of that risk. You can actually look at some contracts that will allow you to account for failure to deliver grain that you expected. But of course, every time you're looking at a risk and you want to eliminate that risk, there's going to be a cost of doing so. And so it is really a risk-reward type analysis. You're looking at the different risks that you expose your business to, and you're looking at the cost of getting rid of that risk. Anytime you take on a contract prior to harvest, you're basically eliminating some risk and perhaps taking on some others as well. To have that clear connection between what kind of risk you're exposing your business with is really key moving forward into the next marketing year.
What broad-scale production and marketing information should prairie producers be paying close attention to, and how should they evaluate the different sources of information?
Well, I think there are two different reports that I keep an eye on. First of all, the reports from a prairie standpoint. If you look at Statistics Canada and the report on planted acres, I think that's critical to keep an eye on this moving forward over the next couple of months as they released more information about planted acres in Canada. And given what we are going to learn about weather patterns and also expected yields, that's going to give you an idea of what supply is going to look like for the next marketing year. And that's going to have a big impact on where prices are going to be moving forward. The second report, or set of reports, I should say, that I'm going to look at is the reports coming out of the United States Department of Agriculture, or the USDA. Now, from a global standpoint, when it comes to, because we are in a very global marketplace when it comes to prairie production and grains and oilseeds, so from a global standpoint, I think this is the most, the source of information that is the most relevant for Canadian operations here, because a lot of the information that is released in the USDA reports will be relevant for pricing patterns here in Canada. Although one thing to understand is that markets react not necessarily based on what is in the report when that report is released. Markets react based on what the consensus was in the marketplace prior to the release of the report, and what the actual report bring forward in terms of information. So I think it's also useful to find a trusted advisor out there or a trusted source of information to be able to understand a little bit what the consensus is in the marketplace. And then once you have critical reports, either from Statistics Canada or the USDA that are released, then you have a better idea of how markets can react moving forward. And that can help you adjust a little bit your marketing plan.
One last question. How can farmers incorporate exchange rates and interest rates into their marketing plans?
Well, the value of the Canadian dollar actually has a big impact on farm cash receipts here in the prairies. Technically, you could actually hedge that risk and diversify away from that risk. From a practical standpoint, though, it's really hard to do from at the producer level. So what I would say is just keep an eye on, when it comes to the value of the Canadian dollar, we know that a lower Canadian dollar will actually bring up farm cash receipts, and generally speaking. So you keep an eye on the drivers behind the Canadian dollar. We're talking about oil prices, for example. It's going to be important to keep an eye on whether or not we're going to have more of a rebound when it comes to oil prices. Right now in the market, we've had a bit of a rebound. Now we have a pause, and so it's going to be interesting to see if oil prices move forward again, because that will bring up the Canadian dollar. I'm also going to keep an eye on interest rates, or the differential between interest rates in the United States and in Canada. We don't expect interest rates in Canada to move up anytime soon. When it comes to interest rates in the U.S., it is expected that interest rates will move up before the end of 2015. And if that is the case, that interest rates move up in the United States while interest rates stay where they are in Canada, that should put downward pressure on the Canadian dollar and benefit Canadian producers, and especially here in the prairies when it comes to grains and oilseeds.
Dr. Gervais, great information. Thank you very much for coming on Farmgate.
It was a real pleasure. Thank you.
We'll be back after a short commercial break.